Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at our proxy for the S&P 500, which is the SPY. And we're going to be looking at a couple of Elliott wave count ideas, and we're also going to be looking at some basic technical analysis. So, this market just continues to push higher. It will not give us any significant correction and it just continues to remain bullish. And I think regardless of how overbought this thing gets, regardless of how overextended this thing gets, we have to give it the benefit of a doubt that it's just going to remain bullish. Despite what all the analysts out there might say, technical or fundamental, until we see a breakdown which fundamentally breaks this upward trend, which fundamentally reverses the momentum, the bullish momentum in a significant way, then you have to remain bullish, I think, in the meantime. So that's what my account represents here. We've been talking about the idea of going into a wave 3 into a wave 4 and then the final push up into a wave 5. We downgraded the wave degree in the last video I did to consider a 3, 4, 5 into a 3 at primary degree. This count now considers it to be at minor degree, and it's just one of those things where every time this market corrects, every time it appears to peak, it just recovers, it just bounces back. So I am going to err on the side of the bulls, and I think if I have failed to do that in the past, it must have been the result of my own biases towards not really buying this rally, in which case I was wrong. And if the market peaks anytime soon and reverses, I will not become bearish until I see a complete breakdown of this trend, which can sell me on a greater correction. At the moment, we just pull back and then we bounce back. We pull back and we bounce back, and we're just not giving anything away beyond a few percent. So until we see that, I just don't think we can even try and call the top here. And as I recently explained in an indicators video for my patrons, I was saying just because something's oversold doesn't mean it's time to buy it, and just because something's overbought doesn't mean it's time to sell it. We need to see a lot more than just that. So before we talk our way through this count here and project forward what I think is probably happening now, we're just going to try and frame the market using some market geometry and some basic technical analysis. I know I normally cover that at the end of the video, but I think it will help explain what's going on. So first thing we're going to do is clear the count here, and we're going to just point out some obvious features of the market here that I think are of interest. So working on the idea that this was our primary pivot here, 1, 2, and everything since has been contained within it, we can see how if we just use some basic market geometry such as a parallel channel here, we can see how each time the market has rallied up to this overhead trend line, it has had a correction. Okay, and we're back there now, so we're bumping into resistance. So we're likely to have another correction. But then I think we're just as likely to just work our way back up to the top of the channel again. And I think this is just going to be an overriding theme. And until this trend breaks and we get clearer signs of a reversal, which will come eventually, it will happen, we can't flip our opinion until we see that happen, essentially. So if we use another piece of geometry here, I prefer this because the Pitchfork seems to fit the price action better. Now we can see here, based off of our primary 1, 2, we've had these lows here around the edge of the Pitchfork. We did not revisit the outer bound of the Pitchfork until just recently. So if I was looking at this from a wave degree perspective, you could argue that this wave, these two pivots here, are related to these two pivots here of the same wave degree. You could assume that, and that is probably the only hope I think the bears have of any significant reversal happening, if I'm completely honest. But it's not necessarily what I think is going on at the moment. As you'll see with the later count, we will consider it as an alternative, because if the market does reverse violently and break this structure, we can then consider a bearish alternative. But until that happens, we should continue to assume a bullish one. So there's no reason to assume that every move off of this primary pivot is going to break until it breaks. You know, we're just going to stay inside of this thing, and we're going to continue to push higher and higher and higher And until we see a significant turnaround, we can just assume that this is a solid piece of market geometry and it's working. I mean, we've channeled between the 38.2 and the 38.2 here almost precisely, occasionally touching the 50s here from a median line. Rally to the 61.8 here, back to the median line, median line to the 38.2 here, down to the bottom for the first time since this these initial moves down back in September of 20 and October of 20. So that's the next thing I wanted to point out. The other thing I want to point out, and I don't tend to use it that much looking at the stock markets, is because it's been the same theme ever since 2009 onwards. Is we've still got the same behaviour in volume as we've seen for years now in these in this broad market. We see declining volume during sharp rallies. So when we get these sudden bounces off of the lows, and they are sudden and violent when we bounce back, we do it all on declining volume. So we're losing volume and rallying faster. Now, after that, when we have these more jagged periods of just gradually stepping the market up, we remain in a declining volume state, just like this rally here. And we can see from this point here, we have a few peaks around the smaller sell-offs, but generally the theme is the same. Volume declines, and then we get some kind of peak in the selling, where the crescendo of the selling occurs, just like we did here as well. But the actual rallies themselves, the bounce backs, the sudden violent moves out of these are all achieved on lowering declining volume. So these violent pops from support are not supported by volume, and that is a running theme of the bull market this time around over the last 12 years now. I've gone back and I've looked, and it just seems to be an overriding theme, and it seems to have intensified since the March 2020 low. So we continue to push higher, but we don't need volume to do it. It's just the way it is and the way it has been. So we can't look to increasing volume as a means of technically providing technical support for a rally. It's not necessary, and it hasn't been necessary this whole time. So the next thing, having established that we've got this market geometry here, and we've looked at the volume, and we've looked at the channel, we should look at our momentum indicators. Now, we've had to coincide with this pivot here and this pivot here back to the bottom of the pitchfork, everything else channeling in between, right? We've had oversold conditions, or just touching the oversold condition here. This is back in October 2020, and we haven't had an oversold condition on the day time frame until this recent low. So there is evidence to suggest that these are related wave degrees. So 1, 2, 3, 4 at the same wave degree, intermediate, primary, whatever. So there is an argument to suggest that. And now we've come back into overbought conditions here. The highest reading we've had on the RSI since the initial peak in the wave 1. So is it possible, and this is the only hook I think the bears have to hang their hat on, if I'm being absolutely honest, is looking at overbought, excuse me, I did not mean to do that, looking at overbought to oversold, and then what we've got here, overbought to oversold to overbought. You could say, 1, 2, 3, 4 and 5 back into overbought. So that would be basically the only way I could say that the bears ever really have any real shot, is that the market's about to peak. I remain unconvinced, and until the market breaks down, I would not call the top. I would wait to see structure break down in order to make that call. But we've seen highest readings in the RSI since this initial peak. We've seen the lowest readings in the RSI since this initial 2. So 1, 2, 3, 4 is a possibility. Similar story in the MACD. We're back above the zero bound, strong momentum, strong acceleration to the upside, average crossing over the signal and expanding higher, and we are back at readings that surpass everything since June of 20. So even if we just take a little line here, we go straight to the very edge of where it is, and then we make the MACD a lot bigger. we can see that you have to go back to June of 20 to find this kind of momentum, this move above the zero bound. So similar story again. We have our initial move up, we have our wave 2 low in our count with below the zero bound. That's our first major correction. We get nothing else below the zero bound again until this correction here. Okay, so this supports the idea of a related wave degree or a larger correction occurring. Violent move up out of here. The strongest move up since June of 20. Okay. So let's, now that we've looked at those, well, might as well throw the moving averages on as well. I don't know where my moving average ribbon's gone. I must have accidentally deleted it. Okay, and the thing's been reset unfortunately, so you're just going to have to bear with me for a moment. I'm not sure why that is, but we'll just sort it out now while we're here. I'll leave that as orange. This changes to green and we use the lighter green. Okay, so this becomes 10, this becomes 20, this becomes 60, this becomes 250. Okay, have I changed the... Okay, why did that not save? Let's try that again. No, that's not right, is it? We want the orange for that and green for that. We want all of these, the EMAs as well. I don't know how I managed that. I must have accidentally deleted the thing. Okay, there we go. Save this as the default. Right, so that's sorted out. Let's just remove this pitchfork here. Okay, so also supporting the idea that we've had two corrections that are related to one another is every price move and correction between these two did not transgress below the 60 exponential moving average for more than a day. You know, in fact, I think we actually wicked down on the second candle here, but we finished above it, so it was literally a day. And all price support, all price action has been above that 60 exponential moving average consistently, apart from here and here. Okay, so there you go. Alright then, now is there anything else I want to discuss here from a basic analysis point of view? Talked about the RSI, but no, I don't think that is. So now let's consider the counts for a moment. And let's turn this off. Come back to the chart. So let's start from scratch actually. We're going to come and look at the more bullish one in a minute, but let's just put down the idea then that we've had a 1 and a 2, a 3 and a 4, and now we're working on a 5. And even though we've got momentum and channeling and lots of other things to help us support this idea, there's some fundamental problems with it as well. The first thing I don't like about this is the length of the 3. Okay, now let's just come back to here. This is the low, this is high. We're in linear scale here. The 3 doesn't even make the length of the 1. I would expect to see that, to be honest. Now the 3 doesn't have to be the longest of the impulse wave, so this puts a limit on the wave 5 if this count were correct. So the wave 5 cannot be longer than the wave 3, so the absolute limit here would be the full length of the wave 3. So we can see how even if the wave 5 is limited, it can still push anywhere up to 560 but not beyond. So you could have a complete blow off top here and still have an absolutely huge move up, even if this was primary wave degree completion. That was our initial assumption going back months ago, that 1, 2, 3, 4. But as we've come up here and we've seen this larger correction fail to reach 100% of the length of wave 1, we've downgraded the wave degree and suspected that actually we're building a larger extension in the wave 3, which will come all the way up to the typical targets for a wave 3. However, this is a possibility because the 5 only has to clear the top of the wave 3 to be legitimate. So we'll save this as what shall we say? We'll just leave this count on here. Now we can add to this later, but we'll call this Bear's Last Hope. Because if we get another correction, and I think we will soon, we are right near resistance, we are extremely overbought, and we are near resistance at the edge of a channel. So there's a possibility that we'll hit resistance in the short term, but if we don't break this trend, and we'll just go higher again and higher again, and the same theme will continue, and every time that goes on, the idea of this count concluding anytime soon becomes less and less likely. And therefore, if you're going to consider the possibility of even a limited wave 5 being somewhere up at 560, you might as well consider the possibility that this is actually a much bigger bull market, which will go on for a lot longer. So on that note, let's look at the most bullish interpretation I've got. We will look at the one I was looking at the other week, which is the idea that this was an A, B, C, expanding B, we're going to come back down. I don't think it's likely anymore, to be honest, because we've just overextended a bit too much. Or a lot more than I would have expected. So let's bring up this wave 3 extension idea. Now this gives the wave 3 at primary degree the benefit of the doubt that it is going to be an extension, but it is going to reach 161.8% the length of wave 1. I'll just double check that I've placed it correctly. 1 to 2. Up here, 5th intermediate wave, 3rd primary wave, 1618, well out into next summer or late spring. And then this will go out well out into next year before it tops. And that's being conservative. These could drag out much longer potentially. I have seen some counts out there which are predicting the market won't top until 2029, and we'll have a rerun of the 20s now, like a booming period of the 2020s, like the 1920s, until it all ends in disaster later in this decade. I don't pretend to think that's possible to predict those kind of moves, to think that we can say, well, 100 years is just the way it should work out. Maybe. I've seen 90-year cycles suggested which said it should already be over, or pretty much over this summer, this winter. So until it happens, we don't know. All we can do is continue to look at support, continue to look at resistance, continue to look at channeling, market geometry, and all of those things at the moment point to the market remaining intact. I see no reason for us to assume otherwise until we have evidence which supports our view. And on this premise, all I've done is projected the wave 3, the wave 4, the wave 5, using the Fibonacci extensions and retracements, and from there it all just sits inside. You know, I did not delete that, did I? You know what, I think I did. I'm having one of those days today. Let me just throw this back on. We're using a shift. Okay, here you go. Now we'll lock that in place. Put this back in Pitchfork's folder, and we'll name this primary. Primary 1, 2. Okay, so as you can see, all I've done is projected forward in time and just built around this primary pivot, this primary 1, 2. It's contained all subsequent price data so far. We've got our wave 3 target at the top of the pitchfork, our wave 4 intermediate degree at the bottom, our wave 5 at the top, and we just work our way up. And as you can see, this could potentially just keep going and going and going for a long time yet. So now that we've done that, let's hide this, not delete it. Okay, now let's come in and have a quick look. Now, I've only been working on this for a week or two, so you still need some refining. But we get the same wave 1, 2 pivot. But from here, we get intermediate 1, 2, minor 1, 2, minor 3, 4, and then minor 5 into intermediate 3 and 4 yet to come. So being very, very bullish, as opposed to saying primary 1 back here, and primary 2 is the same, and saying primary 3, primary 4, primary 5 done. That could be possible, as we've pointed out with our momentum indicators, our channeling. We've got a lot of reason to think that could be possible, except the wave 3 hit back here would have been shorter than expected. Now, it's still a possibility, but like I said, until this breaks down, we shouldn't be thinking anything else, I don't think. So each sell-off is, for the moment, if it finds support along that channeling, finds support along that pitchfork, each sell-off is still a buying opportunity, because every sell-off is met with the same situation. We get a small sell-off, things look very bearish for a while, and then we just rip raw out of the bottom, just go flying. And it doesn't really matter what stories are circulating in the news at the time, or what concerns or worries the market should appear to have, and that people are trying to sell us on, whether it's the threat of the Fed tapering, for example. It just doesn't matter. Nothing's mattered this whole time, and I don't think there's any reason why, no matter how dire or good or good or bad the news gets, it will be interpreted bullishly. So we get worried about inflation. Inflation's not transitory. Inflation's going to destroy the earnings of companies. Inflation's going to destroy the value of the currency. Oh dear, we're worried about inflation. Then, right, that's a reason for the market to fail. Then the Fed are like, oh well, we need to come in sooner with a tapering. Oh, thank God the Fed saved us. But wait a second, I thought the Fed tapering and cutting off some of the liquidity would be bad. Oh yeah, but that saves us from inflation, so it's good. So you can't. It doesn't matter which way you look at it. Everything can be interpreted bullishly. Obviously, we know from a fundamental perspective that that's not the case from history, but it doesn't matter. We're in a delusional state, and it can sustain itself not indefinitely, but for a bloody long time. So I think that's what we have to look at it from a technical point of view. We just have to assume it's going to continue until it doesn't. So a bit boring, I know, because it's not as exciting as say, oh, I think we're done. But until this breaks down in any convincing manner, I think making any other assumption is foolish. So I'm just remain bullish at the end of the day until you're told otherwise. And now that we've got such well and clearly defined market structure and clearly defined levels, that's what we should look to break before we change our minds. Alright then, so approaching a short-term correction is all I'm going to dare say. I'm not going to say likely approaching a significant top. We're coming back up to that channel. We've come up into very overbought conditions. I think we're approaching a short-term top, a correction, and then a continuation of trend. And that's essentially it. Now having explained discount, minor wave 3 into 4, 5 here, this looks like an impulse that's building. Haven't labelled it yet. Let's look at what we were looking at a few weeks ago when we last looked at the SPY. So let me try and find my old count. Here it is. So this had us with primary wave 5 still to come, much higher, and that would be cycle wave 5, so on and so forth, and that we were in a primary 3. So this is essentially the count I expressed that the bears is the bears' last hope, really, that this is the idea that the market's going to peak sooner, early next year, or early next year, as opposed to just lingering on for years to come. And this is the idea that we've still got a bigger correction on our hands currently, that we've had 3 waves down into an A, 3 waves up into a B, and then we'll get 5 waves down into a C for a 4 before continuing higher. So that was my old account, which I've been backing for a long time now, but I've just lost, honestly, with the sheer strength out of this low, I don't think this is viable anymore. Let me explain why. The only thing that gives this any support is where we've stopped. If I can show you why that's relevant, I should have. Where have I put it? Here we go. So if we look at this move here, which we're assuming was a 3-wave move, the only way this is an expansive B, right, is if this is a 3-wave move, or we've had 3 waves into here and this is 3 waves into here. Well, we've stopped around the 1618, which is the golden ratio for an expansion target here of a B. It's extreme, it's the more extreme target we would look for an expansive correction. We would expect it to stop sooner at the 123.6 or the 131.8, but in this case it's run further. I don't like it because it doesn't matter how I measure this subwaves, the extension into this B is gigantic. Okay, and I don't just mean in terms of relative to the A, I mean relative to the subwaves inside of it. So if we just take our extension tool and we say that this is a 3-wave pivot here, we can see that the wave C, this would be A, B, C on the smaller wave degree, has gone beyond the 1618, beyond the 200, and is almost at the 2618. This just seems far too much. If it's technically possible, I guess. There is no cut-off, there is no hard limit for the B written in Elliott wave. We just don't expect it to go beyond the 1618, but it can. It's just less likely. If we take the pivot from here, let's say, so let's just, I've just put this in the wrong place. Let's take it from this here to this here and say that we've got an expanding pivot making up an expanding pivot. This makes the situation worse, and we actually go beyond the 2618. So the idea of this being a B wave top now, I think, is off the cards. A very, very low probability. I think it's more likely now that we're just impulsing up again. We will pull back, and then we will just continue again. And that's what I think is going to be the ongoing trend. The only way something is different is if this is a primary 3, this is the primary 4 like we spoke about as an alternate, and this is now the 5, in which case this will come down and it will break everything that's happened before, and it would just smash this entire market to smithereens. But there's no point saying that's what I think is happening, because that's not what I think is happening. It's a possibility, but until I see everything collapse and break down the structure, then I'm not going to get behind it, because let's be absolutely clear that we've got so much on the side to the downside to correct that you can break all of this market structure, everything we've spoken about, and let's say the market eventually has a 50, 60, 70, 80% sell-off like we've seen in gigantic crashes in the past. I don't think that will necessarily happen. Maybe a 50% sell-off could occur with the amount of exuberance and delusion and what's the word, speculation going on. I guess that's possible. But if that were to happen, then by the time you've come down and broken market structure here, and broken all of this and taken out this high, and even a high back here of a wave 1, which you've got to come down a hell of a long way to do. So let's say even once you've taken out the 1 and you've now got no doubt that this is a completely different wave degree, a completion of a 5, you're smashing the market to pieces, you're breaking the primary pivot, cancelling out the idea that this could be in any way related to this primary 1 pivot. It's definitely related to cycle degree now, not primary. So even if you get all the way to there before you turn bearish, right, you've still got, what have we got here? 40% to the March 20 lows for the market to still give up in terms of value from that point. Okay, you would get 40% out of a short just to make it to those lows. If the overall market was going to give up 50% from the high, so let's just assume now, oh, this is silly, I know, but let's just assume for the moment that the market topped today. Okay, and you were to get a 50% sell-off, where would that put you? Strangely enough, pretty much around the March lows. So around here. So if you had this huge 50% collapse, and you were waiting not even just for the trend to break, but you were waiting for invalidation of the count, you still have this huge area of potential short. So, and I mean, I would be in way sooner than that myself, because obviously I would look for a shift in momentum. I would look for 5 waves down, 3 waves back to set up the standard trade setup that we use on the Patreon, and then I would get short and I would put in a stop in case I was wrong. However, even then I'm not going to assume it's the top until this market structure breaks. So that's it, guys. I'm going to leave it there. I think this count is less viable. In fact, I think this count is highly unlikely now. So I think I'm going to just simply back the wave 3 extension idea that we were just looking at, and assume that until this market structure breaks, whenever that is, that each pullback is just another buying opportunity. And that's it. We'll just wait for the market to tell us that it's breaking down. Alright guys, thank you very much for joining me on this technical analysis of the SPY. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon, and what else was I going to say? Yeah, if you feel like it, leave us a comment in the comment section below. If you're interested in joining the Patreon, there's a link in the description box below. Go over, have a read of the tiers, see if there's anything you're interested in. And if you're not following me on Twitter yet, there's a link to my Twitter feed as well. Alright guys, take care, and I'll be back with you again tomorrow. All the best. Bye bye.